2025. The first half has been a geopolitical whirlwind. An India-Pakistan conflict in May, simultaneous Israel-Iran escalations, and renewed Russia-Ukraine tensions. Combined with global trade chaos triggered by the US President Trump's aggressive tariff policies, markets responded with dramatic shifts. In that period, Europe's key stock indices saw sharp declines. The Euro Stoxx 50 dropped nearly 10% during early April. Germany's DAX fell over 8%. The UK's FTSE 100 shed 9.25%. Spain's IBEX 35 plunged over 10.9%, and
these losses came as a direct response to the April 2nd announcement of sweeping US tariff, followed by Europe and China's retaliation, which prompted the highest sell-off since 2022. Meanwhile, Indian equity market remained highly volatile, where Nifty 50 corrected about 7% during April's peak uncertainty before it partially recovered in May. In contrast, Middle Eastern market gained momentum boosted by rising oil prices and safe haven inflows.
New age investors often concentrate portfolios in equities or equity-oriented mutual funds for rapid growth. But as 2025 has shown, sole reliance on equities can expose portfolios to brutal swings, especially if you're looking for short-term gains.
That brings us to gold. Over the past 12 months, gold prices have soared between the range of 42 and 45%, surpassing every major stock indices. Internationally, spot gold crossed $3,300 per ounce. In India, it crossed 1 lakh rupees per 10 gram, registering a 25% year-to-date rise. So, what drove the rally? Geopolitical shocks, US tariff concerns, along with central bank buying gold and weaker rupee inflating the local prices, all combined pushed the rally.
So, here is the story for all of you fixed income investors, that Reserve Bank of India cut its repo rate 3 times in 2025. Now, results: bond prices soared. There was a significant gain in the debt mutual funds. And what did that lead to? Well, for investors, this meant that there was a stabilization of portfolio and a reduction in volatility, which is an essential contrast, by the way, to the rather unpredictability of the equity markets. And here's the insight. If you want a strong and balanced portfolio in 2025, you need basically 3 key pillars. Now, you need fixed income assets, gold, and equity-oriented mutual funds. Geopolitical volatility is not going to go away anywhere, let's be very real. Markets will continue to react, and sometimes violently. So, in order to thrive, what investors need to do is to spread their opportunities and their risks across equities, gold, and bonds. It's not just smart, it's essential.